festive season is upon us, and while it's been a news-heavy and pretty volatile year when it comes to global economy, global markets, and yes, to some degree, Indian markets as well, there's one thing for sure. The Indian investor has embraced the idea of mutual funds as a way of saving wholeheartedly. Your assets under management have crossed 46 lakh crores. Just look at the figures in September. SIPs at their highest ever at 16,000 plus crores. So what is the picture looking like for the Indian investor who has not only agreed that mutual fund sahi hai, but now has put faith in a lot more? To speak on this, I'm joined today on this special show by Mr. Navneet Munot, who is now the AMFI chief. Thank you so much, sir, for speaking with us on the show today.
Thank you, and pleasure to have you in SDFC AMC office. Wish you a very happy Diwali, and of course to all your viewers a very, very happy Diwali.
Great, thank you for having us. So let me begin with the theme that I laid out in my introduction. Mutual Fund Sahi Hai, super hit campaign. It has worked. Indians have believed it, and they have put faith in the mutual fund industry. But you are now also the custodian of lakhs of Indian families' plans for their future, for their retirement, what their children will do, their education, etc. It's a big responsibility. How are you going to ensure as an industry that that faith is not shaken?
Absolutely, and I always say this, that this profession is amongst one of the most noble professions in the world, one of the most noble professions in the world. Somebody is trusting their money to you to ensure that their life goals are met over a period of time when they need that money back. And this is what our industry has been doing. And over the last several years, going back into decades, I think our industry has exhibited that maturity, that sincerity, that deep sense of trusteeship, that deep sense of a steward of other people's money, and that's how we have grown. You talked about 46 lakh crores. I remember 20 years back when we crossed 1 lakh crore AUM in the year 2002. We were 6 lakh crores in 2012. We became 36 in 2022, and now we are at 46 lakh crores. You talked about the SIP flows, but I give you another interesting number. 10, 11 years back, monthly SIPs used to be around 1.5 lakh. The new SIPs that are starting used to be 1.5 lakh per month. Last month, it was more than 30 lakhs. And this comes, as you rightly mentioned, this comes with deep sense of responsibility, and I think all of us in the industry are fully cognizant of what the society expects from us, what regulators expect from us, what the wider policymakers, everyone expects from us, and we will continue to work harder and harder to ensure that their trust is maintained with us. There's a famous saying, I think Adam Smith, who said that trust is the oxygen of capitalism. Trust is the oxygen of capitalism, and I think each and every person in the industry truly lives by that.
You know, we'll come to the finer details of what's happening in the industry since I've got this opportunity to get you on it. But I just want to follow up on our train of thought. The reason people are investing in mutual funds in such large numbers and actually treating this as a store of their future wealth is because they're seeing this and they're hoping this gives better returns than what they used to love. In India, it was typically your FD, or say investments in real estate, etc. Is the mutual fund industry today beating that? And what about investors who feel that they can do much better on their own in the markets? Look at the number of fresh demat accounts. Investors are going out on their own as well.
No, investors have been investing in every possible thing, right? Historically, we always used to say Indian investors prefer gold, they prefer real estate. Of course, large part of the savings would be in bank deposits. Even insurance has been considered historically as kind of like investments for long, so on and so forth. Mutual funds still are very small proportion of allocation of large number of Indians. All said and done, we have talked about big numbers of the AUM, but there are only 40 million or only 4 crore unique investors in the mutual fund industry. So we have a long way to go. You talked about their faith and are we delivering. If I look at this growth of the industry, what is responsible for this stupendous rise in the AUM? I think there are 3 or 4 big factors. Number one is the track record. Over the last 15, 20, 25, in fact, going back, several of the funds have a track record of 30 years. Some of our funds like our HDFC FlexiCap Fund or Balance Advantage, they have been in existence for almost 28, 29 years, and there are so many other funds in the industry which have got that long-term track record, and a track record of not only delivering returns but delivering risk-adjusted returns. The number 2 is the transparency, and I can say with deep sense of pride as well as humility that this is one of the most transparent product, if not the most transparent product in financial services. Third is the technology. I think over the last several years, thanks to digitalization of finance pushed by the regulator and tremendous work done by the industry and all the ecosystem players, we have made it easier and easier for an investor to participate. And fourth is the training or investor education, where I would also like to thank people like you, media, who's played a good role. The industry has been doing this mutual fund Sahi Hai campaign. Thousands of our distributors and advisors who have done a good job on that. And of course, the regulators who nudged us towards spending the 2 basis point every year of our AUM every year on mutual fund Sahi Hai, and guiding the investors in the right direction. How should they go about investing?
What's next after mutual fund Sahi Hai? वो सही है, अब सब मान गए, अब क्या?
नहीं, बिल्कुल आपने सही कहा कि अभी एक मैसेज पहुंच गया है सबके पास कि म्यूचुअल फंड सही है. लोगों को पता है कि टू मीट माय फाइनेंशियल गोल्स, टू मीट माय लाइफ गोल्स, मेरे को सेविंग्स के साथ प्रॉपर इन्वेस्टमेंट्स करना ज़रूरी है. लेकिन किस तरह से करना है? आप ऑफ कोर्स जो कैंपेन है कि आप वॉलेटिलिटी को बीट करिए, वॉलेटिलिटी से मत घबराइए, लॉन्ग टर्म के लिए निवेश करिए, स्टार्ट अर्ली, इन्वेस्ट रेगुलरली, वो सारे मैसेजेस पहुंच गए. लेकिन सही फंड्स को चूज़ करना, सही एडवाइज़र को चूज़ करना, या डिस्ट्रीब्यूटर के साथ किस तरह से उनको गाइडेंस लेनी चाहिए, या इन्वेस्टर को कौन सा फंड लेना है, किस समय पर लेना है, कितने समय के लिए लेना है, अगर हम और काम इसी तरह से करते रहेंगे तभी जाकर के वो 4 करोड़ का नंबर 8 करोड़ बनेगा और 16 करोड़ और 40 करोड़ अगले कई वर्षों में बनेगा. तो जो अगला कदम है वो यही है कि हम इस 4 करोड़ की संख्या को कैसे आगे ले जाएं. अगर आप देखें जिन लोगों ने डायरेक्ट स्टॉक्स में इन्वेस्ट किया है, जो लोग F&O कर रहे हैं, या जो लोग जिन्होंने क्रिप्टो में पार्टिसिपेट किया है और इवन गेमिंग में पार्टिसिपेट किया है, उनका नंबर हमारे से ज़्यादा है. तो अगर इतना अच्छा आपको एक जरिया मिल रहा है निवेश करने का, तो आप कहीं और क्यों जा रहे हैं?
Because it's not as exciting. It's not as exciting if you're comparing with gaming and crypto.
लाइटर नोट पे बोलता रहता हूँ, इन्वेस्टिंग इज नॉट अनदर फॉर्म ऑफ एंटरटेनमेंट, इट्स अ सीरियस बिजनेस. आई मीन यू आर प्लेइंग विथ योर लाइफ सेविंग्स, राइट? आई मीन यू नीड टू बी सीरियस अबाउट इट.
Now, so coming to the question of transparency and what investors are trying to figure out, I also want to touch upon what it costs them. And the issue of TER, total expense ratio, it's been with SEBI back and forth. There's some conversation on it. Can you just give us a broad idea, to the extent that you can, on whether the industry needs to re-look at what it costs investors to actually go through with these investments through a mutual fund?
I think we have done a lot of study of the other parts of the world. We have done a lot of work on comparing ourselves with the other instruments that are available to the investors. And I can say with, as I mentioned earlier, with a sense of pride as well as humility, that we are one of the most transparent product in financial services. What you see is what you get. I mean, investors can clearly see every aspect of the investments that they have made, including cost, including the portfolios, including the full details of the fund manager, their background, fund house, every single thing. It's super transparent product. From a cost perspective, I think it's one of the most cost efficient product to build your retirement nest or to invest for any reason. If you look at the cost structure of Indian mutual fund industry with a lot of other countries which are developed countries and took several decades. I mean, if you look at US, for example, it's been more than a century since the mutual fund industry has been in existence. If you compare their cost structure, given their penetration, and if you look at our cost structure, I think I have a lot of pride in saying that we've been able to provide an instrument which is very cost efficient, which is very convenient, and a customer can customize to their own needs to find every possible solution.
Does it need to be relooked at in the Indian
I think it's
context?
already been happening. So you would be aware that in the last review in 2018 of the new TER structure, the scale benefits are getting passed on to the investors. I think some of our funds which have grown over the years because of the telescopic pricing structure, the benefit of scale have been getting passed on to the investors, and the TERs have been coming down on them.
So they don't look.
And you have to look at the total cost that investor is paying for both for the kind of the overall participation. I think it's comparable with the best in the world.
Okay, let me come to the risk appetite of the investor today. And yes, mutual funds are and SIPs etc. are your safer long-term options. But even within the category, look at the, I would say, craze almost for your small cap funds. I think I was seeing one figure, nearly 50% of money has come into small cap funds. In June, July this year, some AMCs had to stop lump sums. I think even in your defense fund, you stopped lump sums. Just talk us through what it tells us about the risk appetite of investors, and should mutual funds also give an option to satisfy that risk appetite while keeping investors safe?
So mutual funds provide a fund for every investor's needs, right? Right from parking your cash for emergency needs in a liquid fund or an overnight fund, to a money market fund, to a fixed income fund, to a large cap fund, to a multi cap, to a maybe on the risk spectrum, going to, let's say, small cap fund, or even a sector and thematic fund, or maybe an international fund. I think it's up to each investor to look at their return expectations and their risk appetite, time horizon, their liquidity preference, and the overall allocation, how they want to make. Our job is to provide best possible solution to the investor, best possible products to the investor. Ideally, they should take help from an advisor or a distributor who can kind of suggest them the right set of products. In case they are not able to do that, some of the very simple products like a multi-cap fund or a flexi-cap fund, where you get allocation across market cap, or an investor who want to invest in both equity as well as fixed income, hybrid funds will be a very, very good
So these are all
solution.
the options that are there, sir.
Absolutely.
I'm not talking about the options that are available. I'm talking about what
The
people are
investors
doing.
I think
why the
largely
craze for small caps?
But small caps over a longer period have delivered good returns, right? India is a stock picker's paradise. We have hundreds of stocks to choose from to create a portfolio. Fund managers have done a good job, and that's why money has come. You always see a recency bias. So I take your point. There is a recency bias. I think most of the investors, when we look at the behavioral aspect or cognitive or the behavioral biases all of us have, there is a recency bias where you look at what has happened in the recent past and try to extrapolate that. That's why I think it's the responsibility of the asset managers, advisors, people like you, to nudge them in the right direction. Just don't look at what has worked in last 6 months or 1 year and then extrapolate that into next year or next several years. I think look at a longer term track record, look at your own risk appetite and where your portfolio should be.
But why was there a requirement to stop
like
lump
for
sum
example, I think
investments?
our fund managers and our head of equity, Chirag, has mentioned recently that if you look at the large caps at this point in time, the top 100 stocks, I think in last 2 years, have significantly underperformed mid and small caps.
Yeah.
So on a relative basis, the valuations are more attractive in the top 100 stocks. So the large caps offer relatively a better value, and investors should look at that.
Sure. No, I was trying to understand why mutual funds or some AMCs had to step in and stop lump sum investments. What was the reasoning
So
behind
each
it?
fund manager would be managing the fund with a certain philosophy, with a certain process, with a certain style. At various points in times, you evaluate, I think, the overall size of the fund as well as the investment universe, given your investment process and the investment style. And different fund houses have taken different calls at different points in time. You mentioned about our defense fund, where we stopped lump sum flows into that fund, and we have only been taking SIPs, and that too a very small amount, like up to 10,000 rupees or so per month, because we thought that given the universe and the price rise in some of those stocks, investors just should not look at what has happened in last 6 months, 1 year, but they need to take a more longer term call. So each fund house always evaluate these things.
Absolutely. Just to take that further, do you think there is a requirement for more products for maybe different categories of investors that have that appetite, where this might be a safer option than listening to the latest finfluencer on YouTube and investing in stocks? Do you think mutual funds should play that role?
No, I would surely say that instead of investing or trying your hand directly in stocks, unless you have the ability, time, and resources to do that research and create a portfolio, it's easier said than done. And you also talked about the F&O earlier, and we have this famous SEBI study which said that 89% of the investors lose money. There are hardly 10 or 11% to make money, but still we see a lot of investors trying to participate in that segment and trying to make money.
उस स्टडी का कोई अंतर नहीं पड़ा. 90% plus volumes are still in
कई चीज़ों में समय लगता है. हमारी इंडस्ट्री को 25 साल लगे ये बताने में कि SIP बहुत अच्छा जरिया निवेश करने के लिए. डिसिप्लिन रहिए, अनुशासित तरीके से हर महीने निवेश करिए, बाजार में घटत बढ़त होती रहेगी. लेकिन 25 साल में हम 7,000 करोड़ पर मंथ SIP पे पहुँचे, और अगले 5 साल में वो 7,000 का नंबर डबल हो गया. राइट. मुझे लगता है कई बार कुछ समय लगता है कोई चीज़ को आपको प्रचारित करने में, प्रसारित करने में. जैसा मैंने पहले बताया कि जब हम ट्रैक रिकॉर्ड देखते हैं, जब हम ट्रांसपेरेंसी देखते हैं, जब हम टेक्नोलॉजी देखते हैं और ईज़ ऑफ ट्रांजैक्शन देखते हैं, और साथ में जो ट्रेनिंग पर इंडस्ट्री काम कर रही है और हम सब काम कर रहे हैं, तो धीरे धीरे आप देखोगे कि निवेशकों में इतना ट्रस्ट आ जाएगा, इतना कॉन्फिडेंस आ जाएगा कि मुझे ज़्यादा निवेश ये माध्यम से करना है और किसी भी माध्यम के बजाय.
बट डू यू थिंक दैट the industry, the regulatory mechanism should make an effort to quote unquote protect investors from what they deem as risky? Do you think that's required?
I would give tremendous credit to SEBI, our policymakers, our regulators, for consistently been trying to educate investors, trying to do everything possible to protect investors. But I mean, there is a market and investors are free to choose what they want to do, but in a guided manner. SEBI always works very hard to ensure that investors' interests are protected, right? I mean, that's the main agenda at the SEBI's end, apart from market regulation and market development. But the development of the market cannot happen without investor protection, and I would give them tremendous credit. Why would SEBI come out with a study like what they did on the F&O market and tell the people that 89% people are losing money? I'm sure over a period of time, there would be more research like that, which will open eyes of investors. On the other side, I have this lot of pride and humility, as I said earlier, where SEBI chairperson and a lot of other officials from SEBI have consistently said that mutual fund should be the preferred vehicle for the investors. It's so well regulated and it's well managed that investors can have a lot more trust in a product like that.
Again, we are saying what should be done versus what people actually want to do. Because I just want to bring in...
So on a lighter note, I mean, should people be doing gambling? No. Should people be... There are other...
So F&O is like gambling?
No, I won't say it's a gambling, of course, because it's a regulated market. But at the same time, if the history is clearly showing you where a large number of people have lost money, versus the history, as I told you, that in mutual fund industry, you can look at, let's say, an SDFC FlexiCap fund and look at the 28-year track record, or let's say several of the other funds in our industry of different fund houses, go back and look at the track record. You can clearly see the difference, what is a better way of investing.
In the last 1 year, people will look at the small cap index and small cap funds and said, I should have invested directly.
If everybody had turned so wise that everybody is doing investments perfectly, we wouldn't have this conversation, right? So then always we see there are 4 crore people who have understood the power of mutual funds, the importance of mutual fund for their wealth creation. Within that, I think there are around 2.5 crores who have been doing the SIP continuously. Over a period of time, more and more people will understand that this is a far better vehicle for wealth creation over a long period of time than anything else. But it's a journey, and we are on that journey.
Tell me your view. Tell me your view about finfluencers. Are they a problem? Are they a tool? Is there a need for a more nuanced approach? Because there seems to be a view that people are getting a lot of incorrect information. They are also helping and educate to some extent, but it's uncontrollable, right? What goes on social media is uncontrollable.
If you have a knife in your hand, you can cut vegetables with it. You can make that use, or you can harm someone else, right? With that. So, I mean, it's a power, right? People are following you because you have an oratory skill, or you have an, articulation skill, or you have certain skill set for which people are attracted. That power should be utilized with a lot of, I would say, responsibility. There's a famous quote, I don't know which movie is that, where they say, with power comes responsibility. In every induction program at our end, with every single person in the organization, I use that sentence every day. With power comes responsibility. If we have the power that people are trusting us because we have a brand, we have a pedigree, people are trusting their money, there's a lot of responsibility that comes with it. And we have to ensure that we keep our head down and ensure that we do the right thing for the person who's trusting their money with us. So I would say the same to every person in the ecosystem. See, in India, from $3.5 trillion, we will go to 10 and $20 trillion. We'll become like as big as what United States is today. See the size of our market that would be there that day. Look at the kind of industry that we would have that day. I think we have to ensure that we grow that in the right manner, and the whole world looks up to us.
Already the strength of the Indian investors being seen.
No, but the Indian market from a technology perspective, from a transparency perspective, from the infrastructure, the quality of infrastructure perspective. In fact, I was just addressing, an event 2 days back where there were various market participants from different parts of the world, those who have been running the stockbroker associations or the market associations, and everybody was very appreciative of the efforts that have been put by the regulator and the industry in Indian capital markets.
I think there was a quote also, I'm not sure if from the same event, that Sensex is going to touch 100,000. Do you agree? Do you want to put a figure like that? A nice headline figure?
No, the figure, I mean, you can look at where we were 20 years back, right? I remember in 2003, maybe April or May, when Sensex was at 3,000. Somebody said that we will be at 30,000. I think he would have been laughed at, right? We are at 65,000. I won't make any comment, but you can look at broadly. I mean, we are in a country where there has consistently been double-digit or high single-digit nominal GDP growth. There's been corporate profit growth, which has been matching or slightly better than that, and a growth in the market capitalization. So an economy which is growing decently, a corporate sector which is converting that growth into the corporate profits, and a stock market which is converting those profits into the returns that a shareholder can make or a unit holder through a mutual fund can make, hasn't happened in many countries. In China, for 30 years, they were the highest growing economy in the world. Stock market investors could not make money. Index remained like more or less flat, slightly higher.
So are we also seeing the strength of that Indian investor? You look at our markets, even when foreign investors are fleeing, are hammering us, the Indian investor is standing because of institutions.
They have seen the might of a billion people and the millions of investors. So credit to you, credit to our industry, credit to our investors, and both our Prime Minister and Finance Minister complimented the industry for what it has done. The accumulation of small savings, which has become such a large corpus, that 16,000 crores per month of SIP flow, which can counter the outflows whenever that happens from the foreign investors. Historically, we were vulnerable to the global markets, right? I mean, we used to kind of move a lot in sync with some of the other markets, because the flows were very small relative to the global investors flows, but at the margin that picture is changing, and it's just very, very encouraging.
I come back to the question I started the interview with. Indian investors very happy to buffer foreign outflows. What are they going to get at the end of it? Are they going to get what they signed up for?
They will surely get that. You are in an economy which is in the second year of its Amrit Kal, which will continue to do well. You have a corporate sector, I think, which has a history of delivering or converting that economic growth into the profit growth. And you have capital markets which could convert that profit growth into the returns for minority shareholders. And you have a well-regulated, deeply scrutinized, very well managed with professional excellence, a mutual fund industry which has converted that growth in the market cap into returns which an investor, even with a 100 rupee SIP, can make. It hasn't happened in many countries in the world. And now that over the next 25 years, as I mentioned about the Amrit Kal, India is on the journey to become a developed country. I wish that every single Indian household participate in that growth story through the mutual funds. At HDFC AMC, we have put a mission to be the wealth creator for every Indian, to be the wealth creator for every Indian. And we won't leave any stone unturned with all our industry players to ensure that
a lot of more
house...
players. I have to ask you this. What is happening? Everyone has decided to tap the Indian investor.
More the merrier.
But individuals, fintechs, foreign players. I think there's been a barrage
they've always
of
been. In fact, they've always been. Foreign players have been there for a very long time. Domestic institutions, domestic corporate houses, securities firms, professionals. I think there has been, and now some of the fintechs. So there has been place for many. When we got set up in year 2000, I think we were 26th AMC that day. Our license number, if I remember correctly, was 44 or something. And there were many players even then when industry size was less than 1 lakh crore rupees.
Not everyone lasted.
Sorry?
Not everyone lasted and made it.
Yeah, so this is, that's a very interesting thing that you mentioned, because it looks very easy, but this is not what is that Warren Buffett's quote? Investing is easy but not simple. And I think it requires a deep risk management orientation. It requires a compliance orientation. It requires a deep sense of trusteeship. It requires a long-term orientation, thinking about long-term. It requires very high-quality people, which, not only in terms of professional excellence, but also deep sense of integrity and a client centricity. There are a lot of things are required to be successful in this business. You have to deliver value to your investors, and in a country like India, you need deep distribution franchise. So combination of variety of things are needed to be successful in this business, but as I mentioned earlier, more the merrier. And I wish them all the good luck. As many investors can participate in this growth story, and there will be contribution of many that would be needed for that, including yours in the media.
Why don't we wrap this interview, sir, with a message to our viewers and investors for this festive season and how they should look at the volatility in the markets right now, maybe to the camera.
No, so I wish all the viewers a very happy Diwali, and I wish that next year be more peaceful, prosperous, and full of good health. Mutual funds are a good vehicle to meet all your financial goals. Start early, invest regularly, don't get swayed by the volatility, remain disciplined, and I think that's the best way to create wealth over a long period of time.
Thank you so much for speaking with us today.
Thank you.